I couldn't help but think as I saw Judge by that really cool helicopter. It remind me of Ben Bernanke, Helicopter Ben, dropping the money into the economy. And that's kind of what my topic is today. Many are looking towards the Fed as one of the big risks in the economy. It makes perfect sense, and that's what investors do. Investors worry. It doesn't mean that worry always affects their investing as the high priority concern, but it's always lingering. What's really interesting today is that post-Fed day, where there really weren't any surprises, but as many have pointed out, maybe there was a surprise. By acting so bland in the face of volatility of a major order just recently in the rearview mirror not being mentioned, maybe that is important. But I can tell you there's always a rhythm to the markets with regard to certain big data points, like employment reports and Fed meetings. And we saw that to some extent. Sometimes there's conflicting signals, but for the most part, rates rose, the curve flattened, and post, well, if you look now, 2s, 3s, 5s, they're all still up on the week, although they've had some give back from historic comps. But the long end has slipped on a weekly and daily basis to lesser levels. Part of that is taking a breath. Part of that's post-Fed. But there's also a bit of worry. Now, I'm going to show you 3 charts. The first chart starts in 1952, University of Michigan sentiment. Now, granted, we just had the preliminary look for November. It's not at the highs, but anybody who looks at this chart going back that far can truly see we are at very lofty levels versus history. Second chart, Conference Board. This one goes back to 1967. This one really looks aggressive. And finally, maybe the most aggressive of them all. That's the National Federation of Independent Business Small Business Optimism Index. This one goes back to 1974. Stellar. You know, maybe we're making this too complicated. We are in a consumption economy, which does 2 things. One of them is it mitigates many of the factors that we are all worried about in this trade war. Because if we are in a trade war, we're sitting in the best seat because we consume the most to generate the most. But the other issue is, would all these indices really be at lofty levels? These spongy type numbers? If investors and small businesses were worried about the Fed, I don't think so. Keep it simple. Let's keep monitoring confidence to maybe have more confidence in Fed policy.